Welcome to Forex Daybreak, a daily podcast where we cover 8 Forex pairs and give you our view on the market direction for these pairs. If you are trading Forex market, this is the #1 show to start your trading day. Now, let's begin today's episode.
Good morning everybody and welcome to Forex Daybreak episode 31. In this daily Forex update, I will give you my view on 8 Forex pairs I analyze using Elliott wave principle. My name is Ville Vainio and today is 18th of September 2015. This podcast is recorded also as video and is available from the members area at ForexDayBreak.com. Show notes for this episode can be found at ForexDayBreak.com/31. Now let's get started and let's get right on to the markets. We had an exciting day yesterday. We got finally the FOMC, the long-awaited FOMC statement, and of course there was no rate hike and a dollar weakened. Not that much in my opinion. The reaction was quite mild compared to anticipation this meeting has had. So Euro USD went higher, made a new high, and this obviously means that the minute wave 2 correction was not over yet. And I have labeled on my charts a Fibonacci expansion tool, which is giving us some targets for this C wave we are now on. So those of you who are watching the video can see it clearly. It's at 115.05. So 115 level is the 100% Fibonacci expansion level, and this is in my opinion the target for this C wave to peak. My longer term view has not changed. Even the FOMC meeting was negative for the dollar. I wasn't expecting a rate hike. I wasn't expecting actually anything, and actually that's what we got. We got nothing. We got the same rhetoric than the last FOMC meeting. So almost exactly the same statement, and this was no surprise comparing taking the data account which has come from the US. The economic data has been very weak. Only exception are the job numbers, which are looking good, but also there is some problems when you dig deeper on those numbers. So I wasn't expecting much from this meeting, and I'm expecting Euro USD to climb higher. Now since we made a new high, obviously the decline has not started yet, the next impulsive wave down, so I'm expecting 115 levels for this pair and then a reversal and a next impulsive wave down. Some levels on Euro USD, so 115 is that 100% Fibonacci level, and 114 is quite close on the 61.8% level, which would act as support, and we are just right now on the level 114.04. Okay, let's continue to dollar yen, which also declined slightly on the FOMC statement. And yesterday I was outlining a triangle here, and today I was thinking about this wave count, and if this would form a triangle, this is highly unusual to have a triangle in wave 2 position, so I have not labeled this yet, but if this continues on a sideways range, this can form a triangle. Then this would mean that either we have a wave 2 triangle or this is a wave 4 on the way down. So there's there's a couple of possibilities on this pair. Since the large decline we had about a month ago was so steep, it was hard to say what wave that was. I have labeled it as wave 4, or the C part of the wave 4. So those of who are watching the video, we can see this low here, which is at 116. Let's see, 116, quite even 116, 161. So from that low we saw maybe a 5-way structure, and then now this sideways range has been quite a long sideways range and does not look like a third wave, impulsive third wave to the upside. So let's see how this develops. I would hold trading on this pair at least for a while, since we have a clear view on this pair. Key levels 120.4 is the resistance, and we are actually the same levels than yesterday. 119.376 is the lower support level. So let's see how this develops. If we get a triangle here, then we might need to make a revision on this wave count. Other yen pairs, on my analysis, they are long-term bearish, so there is a possibility that this has already made a reversal and is starting a longer bear market. So let's keep an eye on this, and I will of course revise this count if there is a need to do that. Okay, let's go to pound dollar, which climbed yesterday higher on the FOMC. Disappointing news. Well, the market was expecting a rate hike, but there was no confirmation on any of the Fed officials, or not any clear signal or clear statement beforehand that they would raise rates. They have been talking about raising the rates for a year now, so 1 extra month or 2 extra months doesn't matter that much. Okay, 155.77 is the price now in pound dollar, and the 100% Fibonacci expansion level is at 156.376. Those of who are watching the video can see it clearly on the charts. So I'm expecting this to go towards that level, maybe slightly higher, 156.5, 156.6 perhaps, and then turn down for the next impulsive wave. This would conclude wave 2, minute wave 2 correction, once we see one more wave up, in my opinion. And there's a correlation on the Euro USD wave count as well. We are expecting slight more upside in that pair and also in pound dollar. Key levels on pound dollar 156.4. That Fibonacci level is the resistance. We are now 155.77, and this is also a minor resistance. We are now in the territory of this large sideways range we had way back, maybe a month ago. So there's a resistance area around this level as well. Support level on the downside 155.2, and this is the Fibonacci 61.8% level. Okay, next is euro pound, and there is very little to report here. The sideways range is still continuing. There is no clear wave count to be seen, at least not impulsive wave count, and I don't know where to put the minute wave 4 label, if we have found a bottom for this or are still on a correction. There was a push higher yesterday on FOMC, but nothing major. This move is around 60 pips yesterday, so nothing worth mentioning here. Key levels are more or less the same. 0.7265 support level on the downside, 0.732 next resistance on the upside, and we are actually just right now on the resistance level 732. Also the upper area of the range 7358 is the resistance level. So once we break through, because I'm still expecting upside here, and once we break through the upper part of this range, then we can start concluding this large corrective phase and look for an larger impulsive decline. Okay, next is Euro Yen, and more upside in Euro Yen. I have labeled waves A and B now on the chart. The upside is quite limited since the A wave was so strong and almost vertical, so there is not much room on the upside. On this wave count, 139 is the peak of the B wave, and we are now 136.85. So there is 200 pips, slightly under 200 pips for this pair to go once we start violating the wave count. So I'm expecting slight more upside on Euro Yen and then a reversal to the downside for the next impulsive wave. Key levels 137.4. Next resistance on the upside is the yesterday's high 136.53. On the downside is the next support level. Next is Pound Yen, which has declined slightly yesterday. The FOMC news made this pair go lower. I'm expecting slightly higher figures, maybe the 188.7 level, which is the 61.8% Fibonacci expansion level. There's also 191.5 level, the Fibonacci 100% level, but I'm not expecting this to go that high. And there is possibly 4 waves to count from the low of the B wave. Those of who watching the video can see it. So this level 184.18 is the B wave low, and we can perhaps see a 5-wave structure here, like so. Sorry, a 4-wave structure at this point, and perhaps we will see one more push towards the 188.7 level, and then a decline after that, and the conclusion for this minute wave 2 correction. Key levels on Pound Yen 187.325 is the next resistance level, and 185.35 is the next support on the downside. And next is Euro Canadian, which also made a new high yesterday on the FOMC news, and obviously this means that minute wave 2 is still in force and forming here. Price now 150.19, 152, 1502, and I'm expecting more upside. The wave count is slightly unclear at this point. I would say we are on wave C, but on what point in wave C, this is more difficult to say at this point. But still I'm expecting more upside to conclude this minute wave 2, and then a reversal and a next larger decline, impulsive wave down can start. key levels are more or less the same. 150.09 is the next resistance on the upside, and this is quite close to yesterday's high. 150.8 was the peak yesterday, so this is the next resistance level. On the downside, 149.47 gives support if we start declining. But like I said, I'm expecting more upside on Euro Canadian. And finally, US dollar Canadian made a peak to the downside on FOMC, but came back, retraced all of that. So 130 pip move yesterday, up and down, almost the same was the retrace level. So 110 pip move back was the result from yesterday, and we are right on the same levels than we started yesterday, 131.7. And yesterday I talked about this slight violation of the triangle trend line, so this might be a throw over and we would continue higher. Well, this was completely incorrect. We are not going higher, and I'm expecting more downside. I have revised the count slightly to make this triangle a B wave, and next we should see the C wave, a decline, to conclude this minute wave 4 correction. Key levels on US dollar Canadian, 131.4 is the next support on the downside, and 132.7 is the next resistance level on the upside. Okay, that's it for today's episode. Visit the show notes at ForexDayBreak.com/31, and remember that this podcast is recorded also as video and is available from the members area at ForexDayBreak.com. Another great feature you find there is my Elliott Wave Ninja trading system. Both of these are included on the monthly subscription, which is only $10. So this is very good value for little money. I have a 14-day free trial, so take this no risk opportunity and go to ForexDayBreak.com to sign up. Thanks for listening to my show. Now go make some profits, and I will see you next week. Bye bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com, and tell your friends about us. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.